Lesson Goal. This lesson teaches you about money management, its strategies, and some tips. This lesson will also teach you about profitable trading methods and safe percentages of equity for trade. Learning outcome. Understand what money management is. Discover money management strategies for traders. Find out profitable trading methods. Learn about the safe percent of equity to trade. Know some money management tips. Money management strategies for traders. Money management rules can be implemented in trading by traders in a variety of ways. Below are some examples of money management strategies. The 2% rule. According to this money management rule, traders who want to invest in the stock market shouldn't take the risk of more than 2% of their total account balance for each trade. In this way, beginners and traders who are not interested in taking high risks can benefit from this very conservative approach. Fixed fractional method. Fixed fractional methods require you to purchase stocks for a specific amount before you can begin investing. Stocks of the same company can be purchased in more shares when their value goes up and doubles your initial investment. Taking this step will help reduce your risk. Fixed ratio method. There are many similarities between the fixed ratio method and the fixed fractional method. As a result, you'll have to purchase a stock first. The stock can then be purchased more shares after a predetermined profit has been generated. Moreover, you may purchase even more shares when the stock doubles the preset amount of profit. The cycle continues until you decide to stop. Optimal F method. The optimal F method uses your past performance to determine your optimal position size. The only thing you need to do is look at all the trades that have made you money. Once you have your average position size, proceed to the next step. Your future trades can be based on this position size. Secure F method. The Secure F method is regarded as one of the best money management strategies in trading. An enhanced version of the optimal F method, the Secure F method, involves determining how big your position should be based on all the trades you've made in the past. Future trades are based on the position size determined at the beginning.